Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. And we're getting ready for another day of trade. Dipan Mehta, Director of Elixir Equities, has been sitting by patiently. Dipan, what do you do with a stock like Tata Steel now? Of course, numbers have been weak. The European market is under pressure. But this is such a volatile stock. Do you think at some point it deserves a buy? Is there merit in buying the stock, or would you stay away?
So now it's best to avoid all commodity stocks, not just Tata Steel, but Hindalco. You know, my view on this sector has been very negative. And this particular performance of Tata Steel only builds that conviction. In times like this, you don't want to get into such volatile stocks. There are so many opportunities in the commodity consumers, and one should focus over there. It's very difficult to have a handle on what prices the metals will trade at. And keeping that in mind, you can have no visibility of earnings for all these commodity companies. Optically, they are cheap, no doubt about that, but they never really create value or give solid appreciation.
Okay, all right. And for starters, the Tata Steel stock in pre-open, there appears the initial tick as well. I guess that will settle down and showing that it's likely to open up with a sharp downtick. I think we're just getting the initial rates that are coming in there. But Deepan, you don't like metals and commodities. What about pharma? Divi's Laboratory, well, it used to be a darling. Now it's half from the top. And valuation-wise, well, maybe it's trading more attractive than what it was at the peak, obviously. But business is still uncertain, and the management refused to give guidance on the margins for the next couple of quarters. What's your sense on the stock?
Nigel, I think some structural changes taking place at Divi's Laboratories. And earlier it was the custom synthesis business which was really driving the growth and the margins. But the ratio of custom synthesis has reduced drastically to around 40% in the last quarter. And the low margin generic business is what is contributing higher and higher revenues. And I don't know how long this trend will continue. But given these kind of numbers last 2-3 quarters or so, I would just like to avoid Divi's Laboratories. I think Sun Pharma came with a very good set of numbers, and their strategy is sound in terms of focusing on specialty products. I think that could be the top pick within the pharma space. Having said that, a disclosure, we and our clients are invested in it.
All right. Just take note of the rupee as well, just briefly, because it was racing towards 83, almost 83. But I think it's the rupee started a little stronger as compared to yesterday's close, 82.65 as compared to 82.73 or so. And I think this will be very closely watched because if you just look at the dynamic, the last time the dollar rupee rate was over 83, that is, it got to almost 83.2 something, almost 83.3. The DXY index was at 114. We are at just not even at 83, and the dollar index is only at 104, not even 104. So I think, and as I said, I think earlier as well, at around that level, we saw a snap reaction. There was a lot of chatter that the RBI is in the market. So will we see something similar this time around as well? I think remains to be seen. But last few session, the pace of depreciation of the rupee is picked up. And I think that's got to do with the jobs data in the US. The dollar has moved from 101 to 104. Incrementally, it's strengthened. Yields are sharply higher. The Fed's own market pricing of Fed's terminal rate has moved up some 15-20 basis points. So I think all of that contributing. But this is a dynamic which is important as well. Deepan, I don't know if you have any thoughts on the currency and how that relates to markets, equities.
I think whenever currency depreciates, it's negative for our markets because that just kind of reduces dollar returns, makes India that much more unattractive for FIIs. And perhaps the only way to hedge it is to buy some of the exporters. I heard your interview with Vinati. I think a very nice company, one of the few exporters which have done very well in the last quarter or so, thanks to the product mix. On the whole, I think currencies are very difficult to call. So it's best to just, try and strategize around it. And certainly, I think pharma software companies will benefit from this depreciation in the rupee. But on the whole, that is quite negative for India from inflation point of view, as well as from foreign flows.
Okay. All right. Well, thanks a lot, Deepan, for stopping by and filling us in with a whole lot of stocks and all the fundamental analysis that we did. Wishing you a good day ahead. But good time to call in Chandan Taparia, derivative and technical analyst at Motilal Oswal, who joins us. Hi, Chandan. Good morning. What are the strategies you have for us this morning?
Good morning, Nigel. Thanks for having me. So we have seen some sort of stability in the volatility index. Recently, the India VIX has corrected from 19 to nearby 14 levels. Put-call ratio is hovering near to 1. FI's long-short ratio is also near to 15-16%, which is also giving a sign of reversal. And we have seen some recovery in the market. Again, it started to make the higher base. So we believe that with support of 17,650, index has potential to again reclaim 18,000 marks. Bank Nifty, which was earlier finding hurdle near to 41,500 zone, has come near to the same zone. So I think hold of this level could open the space towards 42,000. So both the indices, Nifty and Bank Nifty, close near to their crucial level. A small follow-up can drive the movement of 200, 250 points in the Nifty, 500, 600 points in the Bank Nifty index. Now looking at stock-wise, first there is buy on Siemens. Capital stocks are doing well. And we have seen that this stock is doing well even after the market volatility. The stock is making higher base with open interest activity, so recommending to buy with a stop loss of 3030 for an upside target towards 3200 level. Second trade, that is buy on Tata Chemical. It has surpassed its 50-day exponential moving average. Consolidation breakout of last 30 trading session with a huge surge in the trading and the delivery volume. So recommending to buy on Tata Chemical with a stop loss of 985. And here we have a target towards 1050. Last trading idea, that is buy on Bajaj Finance. This stock is now bottomed out, negated its lower top, lower bottom formations. Bullish divergence with short covering activity could take the stock on higher side. So recommending to buy with support of 6,000. And here we have a target towards 6350 to 6400 level in Bajaj Finance.
Thanks a lot for that, Chandan. Have a great day. Well, a couple of stocks deserve mention in pre-opening. Tata Steel is under pressure, post its numbers down almost 5%. In fact, LIC Housing Finance as well, with profitability took a big knock, is down quite a bit. Muthoot Finance is under pressure as well. V-Mart Retail saw a fall in the EBITDA, so that stock is down and out. And on the upside, you have something like a JK Paper and Apollo Tyres that are reacting well to their numbers and the commentary from the management. But Max Life Insurance is in focus after its Q3 earnings. The VNB margins came in at around 39%, which was well above street estimates, but the annual premium equivalent is down 5.2% versus last year. In more news on life insurance, as we know, the government in the budget announced taxing income from large ticket savings products. To discuss this, we are joined by Prashant Tripathi, the Managing Director and CEO at Max Life Insurance. Mr. Tripathi, good morning. Before I ask you about your own business, you have had some time to spend over the budget announcements and the impact it would have. On this announcement that the taxation will be on higher ticket sale products, what do you think would happen to that category at all? I'm sure it won't disappear, but do you see a lot of movement around between products, and what is your assessment of what the impact could be?
So yes, I mean, it is definitely a dampener from industry's perspective. As you know, such a thing came for ULIP about a couple of years ago, where more than 250,000 ticket sizes were taxed. Fortunately for us, we didn't see any impact. Actually, there was no impact. In fact, the proportion of more than 250,000 policies increased in our portfolio. So I think the trust and the belief in life insurance, the product category, is definitely beyond taxability, number one. Number two, as far as this particular mandate is concerned, I would like to share with you that more than 5 lakh policies in our portfolio is close to about 8 to 9%. So it is not a very significant part of our portfolio. And I think if we were to look at our overall customer segment, we target the 5 to 20 lakh kind of customer segment predominantly, and that is a very fast growing segment. So the deficit that might come from more than 5 lakh ticket size can be covered up through refocusing it on our core base. Yeah, that is possible. And this proportion looks 9% only this year. Before this year, the prior years, this number was between 5 to 6%. So it is some bit of impact, but it is not as humongous as how markets have reacted. You have seen the impact on share prices.
So do you have an impact on what? Do you have an impact on what this could be for your VNB? I mean, you did mention that just about 8 to 9% is the exposure that you have to more than 5 lakh products. But can you tell us what the impact would be on the VNB?
Yes, it's typically the same or lower, because when you give the product to large ticket sizes, typically the margins are a tad lower because it's a different product construct that large ticket sizes buy. So VNB will be smaller than 8 to 9%.
Got that. Although isn't this as a percentage, as a proportion of the non-par savings book, a better way to look at this in terms of impact, Mr. Tripathi?
You could,
And that would be much larger, right?
You could look at it between the par and non-par both. So par also is going to go through the same. So if we were to look at a weighted average, I think the weighted average will come similar to overall company margin. So the number that I'm giving you is perhaps clear.
There is, of course, the immediate impact, right? But does this also, in a way, curtail the potential for upsell opportunity for customers? I mean, if somebody was paying, say, 2 lakhs to 3 lakhs in premium, I mean, you had the opportunity to sell that person more, higher value policies later on. I mean, that kind of upsell opportunity goes away with this.
Yes, Prashant. So let's understand this a bit clearly. Whatever was done before 1st April 2023 is gone. So really, we are looking ahead, which means if somebody buys a 3 lakh policy, a traditional policy in, say, FY24, and then tries to buy 3 more lakhs in FY26, that definitely comes under the tax bracket. But whatever was done earlier is not going to be counted, number one. Number two, such large ticket holders, we haven't seen significant penetration upsell opportunities. And generally, upsell opportunities do take place in smaller ticket sizes. For example, on average, our customers have 1.2 policies with the company. So, upsell opportunities on very large ticket sizes is a bit lower, number two. And number three, I think there are ways to mitigate this. To your question on what is going to be the short-term and long-term impact, I think there are ways to mitigate this. So I'm reasonably confident that whatever 8-9% that we're talking about,
but is it, Mr. Tripathi, is it as simple as that, 8 to 9%? I mean, that's the point I'm trying to understand. I mean, doesn't it? Because the number of policies sold by private insurers over the last many years is very. I mean, the growth has been very, very. I mean, 3-4% or so. A lot of the sort of growth and value has come from higher ticket policies. Now, it's a question of the addressable market for insurance companies in that sense, isn't it?
So let me just talk a little bit about this, Prashant. More than 5 lakh ticket sizes are very few. I think about 2% of the customers, really. So honestly, we're not talking about a very large number of customers. So really linking it back to our 5 lakh or more than 5 lakh policies, the biggest drivers of growth in the industry. The answer to that is no. Yes, they are a little bit, but I think that's something which the industry could manage. I was just coming, Prashant, on your question on how to mitigate. I think there are possibilities so far because there was no. Let me conclude. There was no constraint on the ticket size we were managing, and we were just focusing on the individual. I think there is definitely a possibility to look at the household, which could pass on the tax benefit to the household rather than one policy holder.
Okay, all right. And Mr. Tripathi, I'm guessing that Q4 will be an absolute stunner because it's the last opportunity for whoever wants to go ahead and pick up those big premium policies. Final question before we let you go. What's the status update with regard to the transaction with Axis? Point number one. And point number two, on the listed entity, the promoter's stake has come down to around 11%. Various reports indicate that it's up for grabs. Have you heard anything? Very quickly, sir.
So on the first one, you would have seen that Axis Bank has filed, and so have we. We have revised our contract that Axis Bank will acquire the further 7% at using the discounted cash flow method, and that's going to happen over the next few quarters. So that's the update. I think as Axis Bank is ready to do that, we will be happy to go ahead and pursue this. On the second one, I have no comments to add because there are such conjectures and such speculations just keep going on. So really, let's keep it at that level.
Okay, all right. Thanks so much, Mr. Tripathi, for stopping by and giving us your take on the holding as well as the recent changes in the regulation. Very quickly, let's run you through what happened with Tata Steel. That's the biggest loser. The numbers were disappointing. The consolidated numbers were disappointing. On the India business, the EBITDA per ton was a miss. The Europe business, the EBITDA loss is more than expected, and there's no movement on the debt reduction plans. So on the back of that, that's the biggest loser, down close to around 4% odd.
Okay, well, just heading into the market opening now, less than about 10 seconds left. And apart from Tata Steel, Hindalco, JSW Steel are also under pressure in pre-opening, so do keep an eye out on that. Hero MotoCorp comes out with its numbers later in the evening, so ahead of that stock is down almost about 0.3%. And on the upside, you have Adani Ports, it's up almost about 0.8%. A lot of good numbers as well this time around, whether it is JK Paper, you had Vinti Organics, where the management was very confident. Something like an Apollo Tyres, where the commentary has been positive from the management as well. So do keep an eye out on a couple of these stocks. That's the first take on the index. The Nifty is absolutely flat with a bit of a positive bias, you'd have to say, 10 points higher. The Sensex is up about 40 odd points and the Bank Nifty is up about 70 odd points. So a flat opening at best. You can't, there's no real direction except that the market is very, very range bound at the moment. On the upside, you have Adani Ports, that's up almost about 1.5%. Divi's Lab is making a bit of a comeback, up 0.7% right now. And something like M&M, Tata Consumer, L&T are a couple of other stocks that are up almost about 0.5 to 1 odd percent. On the downside though, Tata Steel of course is your big loser, down 3.5%, followed by Hindalco, ITC, Tech Mahindra and JSW Steel. These are the other stocks that are down anywhere between 0.5 to about 1 odd percent. Titan is also under a bit of pressure, down about 0.5 odd percent. In fact, consumption overall, ITC, Titan, HUL are all down anywhere between about 0.5 to 1 odd percent. Even pharmaceutical, Apollo Hospital, Sun Pharma are a tad bit under pressure right now. But otherwise, the market is very, very quiet really, just about consolidating around that 17,700 mark. In the broader markets, Adani Group stocks are still under pressure. So Adani Transmission, Adani Wilmar are both down about 2 to 4 odd percent. But then again, you have some good result reactions like JK Paper. Of course, Nigel will take that forward. But the mid-cap end of trade is outperforming the frontliners. So the mid-cap index itself is up 81 odd points. But I think it's the metal space that's really under pressure today.
Yeah, the metal space is under pressure. The top losers are both Tata Steel as well as Hindalco. But the commentary from Tata Steel will be very, very important. We'll get you that at noon today. So hopefully they give some kind of guidance about Q4. In terms of other stocks, well, ACE, the EBITDA was up close to around 57%. The margins as well were up 200 basis points. The initial tick was well in the green, so ACE should come up for you in the screen. TCPL Packaging were out there as well. The EBITDA number was up close to around 42%. Margins were up close to around 60 basis points. BLS International Services, well, the unlocked trade playing out there. Revenue is up by more than 90%. Margins as well coming in at around 15%. So BLS International should come up for you. Sansera Engineering, that's the other one in there. EBITDA up by close to around 16%. Net profit as well up close to around 33%. So these are some of the stocks that have opened up well in the green. On the flip side, you have LIC Housing Finance. I think that was under some pressure. Dispersals were down by 9.5%. So that should come up for you. That I think had opened up with a negative tick. And Balaji Mines, those numbers look very disappointing actually. When the margins compress by 600 basis points, I think they'll have to relook at their guidance going ahead as well. So let's pull that one up. It's down 3.5%. And Viniti Organics, well, the management sounded quite confident about the growth going ahead. So let's see whether or not there is any kind of reaction out there. They are talking about a 20% growth on a 25% growth for this year. So that stock is well up 1.5%.
All right, so that's basically what we have on the markets, the broader picture. 17,765, it's blinking red and green, and no real forceful move or anything of that sort, except of course from where we started and then the swift downward move that we've had. Just a few other things. I mean, Adani Enterprises is up about 2.25%, and Ports is up 0.5%. Adani Ports, by the way, was up almost 10% yesterday. Actually, almost was up 10% yesterday, so that's doing well. Varun Beverages was a very strong mover yesterday, and the follow-through today is equally strong. It's up another 4%. So 1274 on Varun Beverages, and it's coming up on very large volumes, by the way, for this time of the day. I don't know if there are any blocks, etc. JK Paper is up about 2%, 418 or so. There is Action Construction Equipment, which starts about 1.5 higher. And LG Equipment 2%, Traxon, the recent listing 2%, the database company that is, and so on and so forth. Oil India is starting about 3% higher as well. So this is what's doing well. On the downside, I won't go into metals, which has already of course been spoken about. Muthoot Finance, and we have the management join us a little later, starts about 2% lower, 1,015. There is Apollo Tyre, which is down about 2.25%. Adani Green is, I think, still limit down about 5% or so. And Aarti Industries, which saw a 6% pop, is giving back some today. At least at start, it's down 2.5% or so.
On Apollo Tyres, I just want to make one mention. There could be a couple of reasons why the stock is under pressure. The management said that they are lowering their capex guidance. So this is in order to meet their free cash flow positive as well as the ROCs. But that may be construed negatively. I'm not too sure. They also spoke about how Europe is under pressure. So Apollo Tyres, Tata Steel, all of them have that Europe linkage, right? Where the numbers have been weak because of the exposure to Europe. Just wanted to point that out.
Well, just a couple of stocks that I would have pointed out is the Adani Group. Earlier today I was saying that at least the F&O stocks, they were seeing some traction. A couple of those cash market stocks as well that have been at lower circuit, well, they are bouncing up. Adani Wilmar, at least it's come off the lower circuit. So Adani Wilmar should come up for you. Adani Green is still at lower circuit. And I think Adani Transmission as well has moved up. So Wilmar has come off the lows after many, many days. That circuit, has got unlocked. It's moved higher. Adani Transmission as well after many, many days. Remember, these stocks are down 30 to 50% just in the last 1 month or so. And let's pull up Adani Power as well. I'm not sure whether that as well has opened up, but Adani Green was still at lower circuit.
Power is lower, Nigel.
Adani Power and Transmission, both them are lower, but a couple of other the other ones like Wilmar as well as Transmission, they are seeing a bit of an uptake from the low. So the cash market stocks have finally
actually, today may be the first day, Nigel, that you got more up than down in terms of individual names. So Total, Adani Total, Adani Power and Adani Green are at a limit down. Each is down 5%. But the other stocks are in the green. Ambuja is absolutely flat and Adani Ports is flat. But others are seeing a little bit of buying, which is coming in. Okay, so that's the market open. 24 points on the Nifty is what we have. 17,788. Krishna Kumar Karva is Managing Director at MK Global. He joins us right now on the program. Mr. Karva, thanks very much. Great to have you with us here on the program.
Good morning.
Just a quick sense on, now that we've kind of gone through the last week and a half of turmoil with this Adani issue, markets have been roiled a little bit, the budget is behind. How are things looking to you from here out in the medium term?
See, I think as we are anticipated also, we expected the markets to be volatile and primarily driven by global flows. And we have seen that in the last 1 month also, almost 25,000-30,000 crores of FPI selling, which has happened. So I think, and that money has possibly gone in other emerging markets like China, etc. So that has kind of played out to start with. I think now the market will be looking for cues as far as how the domestic flows continue, because now with interest rates being around the 7.5-8%, there is a fear in the ecosystem that domestic investors who have been so resilient so far, there may be some slowdown in anticipation, or because the interest rates are attractive to invest in debt versus equity. So that is something which could be of concern. Now, apart from that, I think it's going to be a hardcore bottoms-up market, and that's the way the market should behave. So rather than looking at it on a top-down basis, investors would do well to look at stocks from a bottoms-up perspective. So if you're looking at from a Sensex perspective or Nifty perspective, I think it continued to be volatile. FPI positioning, etc., seems to be again on the short side only. So unless they turn positive, I think we will continue to be in a range-bound kind of a market with heavy intraday or weekly volatility.
On this entire Adani Group issue, Mr. Karva, I wanted your thoughts. One, on whether the rest of the market could decouple from the Adani fiasco. And two, what do you do with the stocks per se? I mean, you may not want to comment on individual stocks, but at a time like this, when the group is shrouded with so much controversy, do you stay away entirely or do you look at some opportunities here?
Yeah, I think 2-3 observations which I would like to make. One is that look at it this way, that this is the first time that global research houses or specialist investors who look to short sell, and now they have looked at Indian markets very closely and have come out with aggressive research reports and also disclosing that they are short, etc. Now, this is something new for Indian corporates, and which will be very interesting going forward also. So wherever there is a whiff of overvaluations or extremely overvaluations with not too much of research, we will possibly always be vulnerable now to global research houses also coming to play in. We have not seen that so far. So that's something which is very interesting and which all of us will have to be cognizant of. Now, as far as investing in various stocks is concerned, I think it is a function of valuations. And if your valuations feel comfortable, then you should look to invest in. But having said that, whenever there are sharp corrections in a large cap market or in the large group, I think it's better to be very careful in terms of what are the level 2, level 3 impacts, which could be on the debt market, which could be on regulatory issues, etc. And the news flows can be incremental. So yes, there could be some bounce up, etc. The stocks could stabilize in the group currently, having seen the almost 50% corrections. But for investors, I think they need to be aware that there could be more volatility. So you should be very cognizant of the expected volatility and what kind of actions are there from the regulators and the lenders. I think these are the two things that will play out in the next few months. But till then, you need to be very, very careful before investing in any of the stocks.
Okay, all right. Hi, Morning Krishna. Thanks so much for stopping by. Well, what's your take on the two pillars of the market, the banks as well as IT? The IT stocks have seen some bit of a pause in line with what's going on with the Nasdaq, while the banks as well, they did see a correction once this entire Adani fiasco did come, to the forefront. What's your view on both these two?
Yeah, I think as far as IT is as far as banking is concerned, I think it has been a consensus trade for the local institutions, local investors, as well as the global investors. And last year we saw them outperforming significantly. So currently the situation is that, yes, the workings of most of the banks which have come out, etc., has been very good, very robust. Valuations are also attractive. But despite that, we are not seeing a significant uptick in the stock prices. That I think is a function of over ownership at the local level. I think almost all domestic funds, etc., are up to their neck in positions or investing. So they are not in a position to invest further despite valuation being attractive. And the second question is, yes, FPI selling, which continues to be unabated. Now, they also own a significant part of these positions in these banks. So we are continuously seeing a selling. From a fundamental perspective, I think credit growth is kind of a given, but I think the challenge that many of the banks are facing is as far as ability to raise deposits. So I think individual banks who are in a stronger position to raise cost-effective deposits, they should possibly do well. So yes, valuations of many of these banks are attractive, but the challenge is on technical fronts because of the over-ownership. Now, within the banking system, yes, public sector banks did do well, and then there was this challenges. I think most of the banks have come out with their disclosures on whatever exposures that they have. I think the underwriting standards are very strong across the banking system. So I don't think so that should be a concern for investing in public sector banks also. But my concern remains the same thing, that if the top 1-2 private banks, if their valuations will decide the benchmark for the valuations of the public sector banks. So that's where the challenge is. As far as IT is concerned, I think the fears were overdone. We saw almost 20-25% correction in the calendar year 22. And rightly now what we have seen is after the quarterly results and maybe some kind of guidances in terms of going forward, the stocks are positive. I think cash flow, etc., remains very strong for these companies. Valuations have also become reasonable. I'm not saying attractive. The big uptick possibly in IT companies could come post the fourth quarter numbers when more guidance will be available in what they foresee for 23-24. But yes, in an uncertain environment, or rather an global environment, which you believe can become much more stabler going forward, then IT companies will possibly make a decent comeback.
Okay, by the way, one of the stocks in focus this morning yet again is Paytm. After the big move yesterday, Paytm is seeing some follow-on buying. It's up 3%. Remember, this is the first time that the EBITDA of the company has moved into the black, which is EBITDA positive of around 30 crores is what they reported this time. And the net loss declined as well. Mr. Karwa, your thoughts on some of these, new age companies, e-commerce companies. Do you think that the path to profitability is now upon them? And if yes, do the valuations look attractive? Paytm, Nykaa, PB Fintech, Delivery?
I think if you see in the last almost 2 quarters now, after the kind of deep correction that many of these companies have gone through, I think the managements have started talking the language which public market investors understand, which is the path to profitability, whether it takes 6 months. Earlier, the question was only about growth, and without focus on profitability. Now, at least they have started talking, and possibly some of them have started delivering also on the path to profitability. So valuations may be challenging for many of them, but at least they are making the right public investors. Sense is that wherever there is a clear leadership in some of the businesses, those businesses and uniqueness of those companies will possibly attract more investors. And some of the businesses which can be replicated, that could be a challenge over there. So selectively, it is time to look at these companies.
Okay, all right. We will leave it at that. Thanks a lot for joining in and giving us your view on the market as well as, on what you expect going forward. Well, by the way, the market is very, very quiet. So let's move on now and talk to a big corporate who's joining in. DLF posted good Q3 numbers. The company has clocked in its highest ever quarterly rental revenues, and bookings also look quite strong with nearly 90% from new projects. To discuss the earnings and the recent announcements that came in from the union budget, more importantly, we're joined by Ashok Tyagi, the whole-time director of DLF. Mr. Tyagi, good morning. Thanks a lot for joining in. I think it was a bit of a shocker when there was the 10 crore deduction cap on capital gains on residential properties reinvestment that came through in the budget this time. What do you think the impact of that would be, sir?
So, honestly, I mean, in all fairness, every budget has a couple of these, tweaks which one wonders. But in all fairness, I think, they were going with a certain philosophy. Purely from a DLF standpoint, I think we have about 40 odd Camellia units that are left, which are the only 10 crore plus units that we have in our sort of overall portfolio. I mean, marginal tweaks here and there. So, frankly, it doesn't impact us significantly. I mean, by the time the next major super luxury project, comes in, it will be, I think, a couple of years down the line. So I think at least there's no immediate impact. Overall, definitely, I think it could have some bearing, especially on markets like, Mumbai. I mean, downtown Mumbai, where a lot of apartments do cost, significantly more than 10 crores. And I mean, honestly, it just also, please appreciate, it doesn't impact, the sale of all new apartments. It only potentially has a bearing on those sales of new apartments which were funded by a disposal of an existing property, frankly. And I think that is the key. So let's see how
what is the percentage for DLF?
Yeah.
You said, I mean, it's a very small portion. I think you said 30-40 apartments of Camellia are still yet to be sold.
So we have 40
but overall,
apartments.
In your portfolio, what's the percentage of super luxury?
No, so overall, frankly, if you see, I mean, these 40 apartments, the total value will be about 1,700 crores. And we don't have anything more either now or in the launches in the next couple of years, which should be breaching the 10 crores mark, really. So hopefully, at least for the next couple of years, we don't have an impact right now.
Sonia, you're not too late, right? 40 apartments are left. Go for it.
You looked very interested when you said 40 apartments are not sold yet.
Not at all. I mean, Mr. Tyagi, sorry, just one thing. Good morning. We had an insurance company earlier, and I asked them, it's very different, of course, in terms of business, but high value, the higher end of the segment, sort of market has been doing very well across the range of products and services, right?
Yeah.
Will this in the future change your plans? I mean, have you bought a piece of land which you plan to develop, or were you planning to do something? Is there a change in strategy which will which will have to be done because of this? Yes.
So frankly, Prashant, if you would recall, in the Mr. Jaitley years, there was the first tweak that was done was that, if you dispose of one unit, you can only, refinance one unit to avail capital gains. So the GOI has been tweaking these capital gains on property things for the last few years. Every time it happens, it looks as if it could have a marginal impact, but frankly, the market so far has been fairly resilient and it's bounced back. Secondly, on this entire super luxury piece, be it the high value in insurance premia or this, I think, one has to be balanced, because you also see that the government's also begun at least the glide path to lowering the peak rates of taxation and all, which has gone down by about 3.7% in this budget. So I think, I guess they also have to balance their books. So honestly, not really too much concerned about this.
Okay, all right. Mr. Tyagi, then let's focus on business. Your sales bookings in the first 9 months are around 6,600 crores. But I think the guidance was for around 8,000 crores odd. Come on, I think you'll have to go ahead and revise that number, right? Give us a more realistic number. Things are looking good on ground. Q4 normally is quite strong. By the end of this year, what can you end at?
So honestly, I wouldn't want to sort of, commit to a number because we have not done it in the analyst call also. But clearly, I think the 8,000 number should hopefully, be breached very comfortably. By how much, I think we will know in the next 4 to 6 weeks. But I think, the 8,000 number definitely has a very high probability of being breached and breached comfortably.
And just going by what you have done on a run rate per quarter, you should beat it by close to around 10% odd. Mathematically, you should be around 8,800 crores. Possible?
Possible, yes, definitely. But again, markets are what they are. So, but yes, definitely fairly high probability, Nigel, of that happening.
Okay, that's great. Pricing has gone up quite a bit across the board and across most metros, right? It's crazy the kind of rates that are running now in metros like Mumbai. Even in NCR, Jefferies put out a note where they said that for your projects, for DLF projects, the pricing is now 30 to 50% above pre-COVID levels. Is that true? And if yes, overall, what kind of improvement in realizations do you see for the full year?
So clearly, in the last 2.5 years, there's definitely been a pricing upside. There's no doubt about that. Be it in the super luxury segment, be it in the premium segment, be it in the mid-budget segment, be it in Delhi, Panchkula. Frankly, definitely, the price points have strengthened. I do believe that I think gradually, as the interest rate cycle and all have also tended to strengthen, I think we should hopefully continue to report price increases to offset inflationary pressures. But honestly, I wouldn't want to hazard a number of by what percentage will prices keep on going up. But I think clearly, we do believe that today, if you are a credible developer, have a good location, and have a sort of a product which is appealing, I think you can ask for fairly comfortable pricing levels.
Just one quick question on interest rates. If you remember when we had spoken, I think sometime late November or something, you basically said that, there's some buyer hesitancy which starts to creep in when interest rates go up to about 9%. Tomorrow we have the RBI decision where perhaps we will see another 25 basis point hike. Maybe banks, etc. will respond. Are we at that level, Mr. Tyagi?
So, Prashant, honestly, I think that there are two pieces. Yes, conventionally, 9% used to be a level at which, buyers tended to become more cautionary. But I'll be very candid that it's not been happening and not only with us, I think with most of the bigger organized players, the pre-sales levels don't report that. The second thing is that while, yes, you are right that the RBI may go in for one more hike, I'm not an economist, so I wouldn't venture into that territory. But by whatever the pundits so-called are saying, I think we are clearly reaching the near peaking of the interest rate cycle. So, if the perception was that the market could hit 9 and, tending to 10 or 10.5, it's a different psyche. Versus a psyche of that, okay, it's hit 9, but hopefully now things will stabilize and maybe after 3 or 4 quarters, things could begin reversing. And I think we are possibly in that perception zone right now. So, the risk zone was 6.5 to 8.5, 875, and the market has not reacted adversely to that cycle. So I think hopefully, now it should really be a more maneuverable ride from now on.
So what's the pipeline looking like for FY24 in terms of launches?
So we have a big group housing launch coming up in Gurgaon. Then in the fiscal 2024 we will obviously have this launch obviously riding further, and maybe one more significant group housing launch toward the later part of the next year. We should hopefully have a launch in Chennai and in Panchkula. So I think we will have a fairly strong launch pipeline, apart from, of course, selling off whatever finished goods inventory that we have.
Okay, all the best with the launches, Mr. Tyagi. Thanks a lot for joining in and speaking to CNBC-TV18. That is the word coming in from DLF on the budget announcements, the impact. They're saying it won't have any major impact. They don't have any large super luxury project coming up. And of course, the way forward for their business. Let's slip into a quick break. Up next, Ajay Chaudhary of REC will be joining in to discuss their Q3 numbers, the exposure that they have to the Adani Group. And we'll also connect with George Alexander Muthoot, the MD of Muthoot Finance, to discuss their Q3 numbers. The stock is under pressure. More on that in a bit.